The commentary today is from leading with Joe. If I had cash and room in my portfolio, I would buy Uber. I mean, you've had opportunities to buy it, and you haven't to this point. Why not, and why suddenly now?
So I am fully prepared for you to direct that question at me, and it's a great question.
Well, why wouldn't I? If you said if you had cash and room in your portfolio, you'd buy. Who would I going to ask Steph about? What, something you said?
Let me wax poetic about Uber. Okay,
go ahead.
Gross bookings up 33%. A record number of users at 122 million. Managing telling you how confident they are on the outlook. Introducing Uber Eats, the delivery component of this business during the pandemic, which differentiates them from Lyft dramatically. So why not buy the stock? Because I don't have room for it in my portfolio until I spoke to our producer, Patty. And I went through my entire portfolio and I said, which is the one name that I would sell to put Uber into the portfolio? I already own Bank of America. I own Morgan Stanley. I own Goldman Sachs. And I bought JP Morgan too darn high. And it's just sitting there doing nothing for me. So how about I kick JP Morgan out of the portfolio and I buy Uber? I don't know what everyone thinks of that, but that's exactly what I think I'm going to do.
Wow. So it's not something you've done yet, but you're going to do it.
I am going to do it. That is correct.
When are you going to do it? Today?
Maybe I'll show up on overtime this afternoon and I'll announce it with you then.
Well, I'm going to pin you down.
Don't
do it, Joe.
Then my peeps are going to
don't do it.
Why, Michael, why not?
What?
Mike,
I'm not doing it.
I could get 20. I think.
Joe,
go ahead.
Finish your thought, then Michael respond. Let's do it that way.
Michael, I think there is a 20 to 25% upside ahead based on what I heard today from Uber. I don't think I'm getting 20 to 25% from JP Morgan based on what I heard from Jamie Dimon.
Yeah, and okay, here's what I can't do, though, Joe, and maybe you can do it with your discipline, but I can't with mine. The company doesn't have earnings, and as much as I admire the CEO, as much as what I think that they've done in the turnaround and the new innovation and everything else, they don't have earnings, and I just can't let my admiration for a CEO and the appreciation for the innovation, Stephanie and I were talking about this earlier, won't drag me away from my discipline. Not owning earnings in a market like this, I think, can be perilous. And if we see another down leg here, I think a company like Uber can really get slammed and could hurt that performance longer term.
But Michael,
I'm looking for earnings, Joe.
You called it to our producers a speculative stock. Really?
Yes.
You think Uber is a speculative stock?
Absolutely. Yes. Anything without earnings is a speculative stock. Absolutely. I need to see earnings, and I want to see earnings growth, and I want to see a management team that actually knows how to grow earnings and manage debt during a very difficult environment. This is a brand new company, new innovation. They're getting through it, but no, not when I can own other solid balance sheets and growers. Money's too hard to make to kind of play with.
I mean, there's some who would take issue with you calling it a new company. I mean, you can make the case that it's a mature company. I mean, they still have innovative things that they're doing to try and grow their business. But I don't know. Stephanie Link, where do you come down on this?
I'm too mature to call it new. I mean, to not call it new.
All right. Steph, settle it here. I mean, there's not only the Uber decision here. There's the getting rid of JP Morgan decision here.
I would not own JP Morgan. It's too expensive. It always has been, and I don't think they've delivered the last 2 quarters. So I have no problem with selling JP Morgan, but I wouldn't sell any of the other banks that Joe owns, because I do like them, and I own some of them as well. The Uber quarter was a thing of beauty, right? Across the board, adjusted EBITDA was $800 million better than last year, and that's huge for a company of this size. Total revenues beat. Free cash flow is huge. So it was outstanding. I get why the stock is up. Even though it's up, it's still down 33% on the year. I fall into Michael Farr's camp of it doesn't have earnings in this kind of an environment. When the Fed is raising rates, I think it's just going to be a challenge. And so, yeah, maybe it pops. Maybe Joe is right in the short term and it could pop and the momentum traders get in it. but I don't think it has the longevity, not given the macro backdrop.